Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. These are the top headlines, the biggest one being the US inflation number, which has come in higher than what the expectation was, and it has rattled the global markets and how. So as always, first let's take a look at the Asian markets, and the red-hot inflation number in the US has led to a sharp decline in Asian markets. Across the board, we are seeing cuts of anywhere between 2 to 3%. Korean currency is at a 13-year low, and the Japanese yen is at the weakest level against the dollar since 1998. So Taiwanese index as we speak is down almost 250 points. We have Hang Seng sitting with cuts of almost 500 points. In fact, it has aggravated those losses since the start of the trading session. And SGX Nifty, as a result of all this, is indicating a gap down opening for the Indian market with a cut of 340 points. Well below that 18,000 mark that we saw yesterday. So it looks like it could be a day in the red yet again. But let's talk about the US markets, because it was the worst day since June 2020 for Wall Street after a hotter than expected inflation report. The Dow Jones tumbled over 1,200 points, or almost 4%. The S&P 500 slipped 4.5%, and the tech-heavy Nasdaq, it sank over 5%. CNBC's Sarah Eisen gets us a wrap of all the action on Wall Street.
The major averages posting their worst day since June of 2020 as Wall Street reacted to an August inflation report that was hotter than expected. Many economists were looking for food prices to fall, but instead the cost of food, rent, cars all continue to climb higher. The Dow down nearly 1,300 points, almost 4%. The S&P down 4.33%, and the Nasdaq also posting the biggest drop off, more than 5% lower on the day. Twitter shareholders voted to approve Elon Musk's $44 billion bid to buy the company and take it private. This comes as Twitter is suing Musk for wanting to pull out of their deal. Meantime, mortgage rates hit a 14-year high, now standing at over 6%. That's the action from the U.S. market. Back to you in Mumbai.
Okay, that is the U.S. market action read across the U.S. screen. But of course, onto the big Q for the day. Inflation in the United States rose more than expected in August. The consumer price index increased 0.1% over the previous month and 8.3% year over year. Increases in food, shelter prices offset the decline in gas prices. CNBC's Steve Leisman gets us a wrap of all the highlights.
Yeah, the August inflation number making a huge disappointment for markets, looking for a peak inflation and for a Fed to do fewer rate hikes. All of that going the wrong way. I'm not going to read you all these numbers. All you got to do is look at the chart. It shows every number came in above expectations. The most important one, that core CPI, doubled the expectation. That's the one the markets and the Fed hoped would have cooled more and would have led to lower policy. Instead, how did we get here? In gasoline, it behaved as expected, down 10.6%. But food coming in hot at 0.8. Housing, that's a third of the index, up 0.7. And apparel as well. We're not seeing the inventory, the bloated inventories and the pass along in lower prices in the apparel or other goods sectors. By the year end, the market now sees the Fed over 4%, and the peak funds rate has risen to an expectation of 4.35 now. That just ticked up again, up from the 4% before the meeting. And the market now pricing in a 33% chance of a 100 basis point rate hike next week. I think it's overstating the case, but it's a sign of how concerning this market sees the inflation report today.
Okay, CPI data, it has sparked a sell-off on Wall Street, but let us get you some important opinion coming in on the August CPI print and the markets. Listen in.
We've actually had a lot more inflation over the last 18 months than recorded in the official statistics. And we're going to show a lot more inflation next 18 months, and there actually is going to happen. And the reason is specifically housing. My feeling is that, you know, if they see the slowdown, if they take a correct view on what future inflation is, they may not have to go that high. That's the relief the market is watching.
Well, I think the markets are down to today for three reasons, and that's worries over recession, valuation, and Q3 earnings. So first of all, with the Fed tightening even more than expected, perhaps 100 basis points coming up, what does that mean for the future depth of a recession, which we do think will hit? We think the U.S. dollar remains strong because even with all of this going on around the world, the U.S. has been a safe haven because our economy and its resiliency is good for the dollar. And that also is what's giving the Fed the leeway to keep raising rates. They have been clear. They're going to continue to battle inflation. We see it remains hot. And that could happen at the expense of the economy. And with employment staying strong and consumer strong, it gives them the ability to keep raising rates in order to finally squash that inflation.
I don't think anything surprises me with inflation data anymore, Sarah. It's hard to predict. I think the Fed hasn't got it right. The street really hasn't got it right. A few people were calling for big inflation last year and did get it right. But really, I think we're all flying a little bit blind. The one thing we do know, Sarah, and this is the important thing, is the Fed is really interested in kiboshing inflation. And they're going to keep going, and they're not going to declare victory early. And I think the market keeps getting ahead of itself and thinking that this Fed pivot is somehow just around the corner, and they're telling you it's not there, but the market just wants to believe it and gets itself all, excited, and then a little disappointment comes in and you get a day like today.
I think we'll retest the lows of June. I don't, for a simple reason that stocks bottom as inflation peaks, and I think July was the peak number. It's not coming down very fast, but it is coming down. I think they're going to raise rates by 75 basis points. Look, I think to a certain extent they're a little embarrassed because inflation has turned out to be a lot more persistent than what they argued last year. So I don't think they're going to raise 25. I think they're going to be a lot more aggressive than that and make sure they don't make the mistake on the, a second mistake.
Okay, that is the expert opinion coming in on the big inflation number for the month of August in the US. And now to the final update on our global market wrap. European markets erased all its gains in the early hours of trade to end Tuesday's trading session lower. The French CAC slipped 1.5%, the German DAX slipped over 200 points, and the British FTSE closed with losses of over 1%. Hi, welcome back. You're tuned into Power Breakfast on CNBC-TV18. Well, we spoke about the impact of US inflation across the global market, but how will these cues impact our own markets? We have a research team joining in to tell you just that and to put things into perspective. We have Sonia, Vaishta and Nigel joining us now. Good morning, guys, and thanks a lot for joining us. Sonia, let me come across to you first. What is the market setup looking like today? So, this morning, the SGX Nifty is under quite a bit of pressure. It's down almost about 300 points, indicating that the start will be well in the red. As we know, the US markets have been under pressure. The Dow is down almost 1,300 points. This is the weakest that we've seen on the Dow since June of 2020. The August CPI data, the inflation data, has shown that inflation has risen 8.3% year on year, despite a rise that we've seen in gas prices. And that has sparked fears that perhaps the US Fed could hike rates by more than 75 basis points in this September policy that kickstarts on the 20th of September. However, just also track what's happening in the world of commodities, because Brent crude has fallen to $93.2 a barrel after the bearish US economic data. But the important bit is that our own markets have been very resilient and every dip has gotten bought. So let's see if that is the case today as well. FIIs continue to buy in this market. They bought almost 2,000 crores in the cash markets yesterday, and this is the third straight day of 2,000 or more crores being bought by the FIIs. Together in the last 8 trading sessions, FIIs have bought almost 8,000 crores. The big question is, will the dips get bought? Remember, DIIs have sold. They continue to sell yesterday as well, about 1,268 crores. But this is the market that has a lot of momentum and is decoupled from global peers. So let's see if the dips get bought today. Back to you. Oh, yes. OK, so we'll watch out for that. Sonia, thank you so much for that. But of course, a lot of stocks will be in focus as well. Market, of course, remains the primary focus today. But Vaishta, take it away.
Hi, Sonal. Thanks for that. Well, the first stock is KC International, wherein they have won a new order of approximately 1,100 crores, which is across the transmission and distribution, railways, oil and gas business. The next stock is Hudson Agro, wherein there's going to be a board meeting on the 19th of September to consider a fundraise via the rights issue. Next is JSW Steel, wherein the company collaborates with SMS Group, which is a German company, in decarbonization drive, investing 10,000 crores to reduce the carbon emissions. And the last stock is Bharat Forge, wherein the subsidiary Kalyani Powertrain and the commercial EV company Harbinger Motors has announced a JV to develop electrified dive trains for the commercial trucking industry.
All right, Vaishta, thank you so much. All these stocks will be in focus today. And finally, Nigel is joining in with all the cues from the F&O space. Hey, Nigel, morning.
Well, morning, Sonal. First up, in terms of the flows, the FI flows, they continue around 2,000 crores per day, which is encouraging. The problem is on the DII side. That net sell number has been moving up from 700, 800. Yesterday, we got close to around 1,200 crores odd. And that was the highest net sell number we have seen from the DIIs in the last 1 month or so, to be precise. August 19th. Now, moving to the F&O action, yesterday it appeared there was big short covering, and that's precisely what happened. Big short covering is what we saw. Close on 25,000 contracts were covered on the short side by the FIs. And now the short positioning has moved to around 65%. Remember, just in the past week, it was at around 80% or even more than that. In the previous session, it was 75%. Now that's come down to around 65%. If you look at the FI, short minus long positioning, well, now they have close on net short, close on 35,000 contracts on the short side. Remember, a week or so ago, it was close to around 85,000 contracts odd. The point that we're making is a lot of that short covering has already played out. What's encouraging, though, is that put writing continues. In an uptrending market, you like put writing, to continue, and that's precisely what's happened. So yesterday as well, more than 40,000 put contracts were written. Today, it's a test of those put writers. If you see some big unwinding out there, then maybe, in fact, the Nifty wants to correct a little bit more, maybe go down to around that 17,500 odd mark. But yesterday, the 18,000 put was very active. There was writing out there. Let's see, keep an eye on that, whether or not there is some big unwinding out there. The PCR as well is moving towards the upper end of the band to around 1.4 odd. So how do you approach trade today? The bulls will like to defend that 17,650 to around 17,700 mark. Remember, the 20 DMA comes bang in that line. So that's the crucial mark on the downside. If that holds, the bulls will still feel that they are in the game. The resistance will be yesterday's high around that 18,100 odd mark. The dip comes in early this morning. First hour low, track it. If you can buy that and keep a strict stop loss, maybe in fact you'll make some money. Back to you.
Okay, all right. So Q is not looking so positive as far as our own markets are concerned. But that is about the equity markets. Let's also talk about what's happening in the commodity space. A lot of action out there as well. Manisha Gupta is joining us now. Hey, Manisha, good morning.
Morning, Sonal, and thank you for that. Well, the hotter than expected U.S. inflation really is the theme today, and is the reason we have seen decline across asset classes. Is exactly what we are seeing in commodities as well, where the Brent crude prices have, the rally has seen a pause there. The rally also has seen a pause as the markets are looking at the strength in U.S. dollar because of the higher U.S. inflation. There are now an 81% chance of a 75 basis rate hike at the U.S. Fed meeting on 21st of September. And that is what is weighing on in case of the gold and silver prices as well, where we saw the gold prices fall by 1% and silver is down by 2%. And that theme really seems to be spreading across the base metal prices, where we are trading 1 to 1.5% of a decline across base metals right now. The only thing that I see trading firm right now, perhaps, is the zinc prices, but everything else is down. Even the Bitcoin price is down anywhere between 6 to 15% is how Asia is trading.
Hi, welcome back. You're tuned into Power Breakfast. Well, the Union Cabinet is likely to approve the much-awaited National Logistics Policy 2022. The Prime Minister is set to release the policy document on Friday, and it aims at lowering logistics costs in line with global standards through a comprehensive action plan and greater uses of digitization and automation. Parikshit Luthra is joining us with more details on the same. Hey, Parikshit.
Yes, this is a policy document that has been in the works since 2019. This is also announced in the budget. What this will entail, a single point of reference for all logistics and trade facilitation. It will envisage standardization of physical assets, benchmarking of service levels, and harmonization of documents. Essentially, there will be an integrated digital logistics system that this policy will provide for, and increased use of digital transformation, increased automation to bring more predictability, visibility, and efficiency in the logistics chain. It sets 3 targets. This policy sets a target of reducing cost of logistics to global standards by 2030. Also, improve India's performance in the Logistics Performance Index by bringing it in the top 25 rankings. Also create a data-driven decision support mechanism for an efficient logistics system. Now, in terms of implementation, there will be an empowered group of secretaries under the PM Gati Shakti program, which will monitor the implementation of the scheme. This EGOS will also appoint a service improvement group. There will be no financial implications of the scheme. Essentially, all the line ministries will make their expenditures towards different aspects of this policy under existing procedures. So what this policy will entail, a comprehensive policy framework which will cover all ministries, all subsectors of the logistics sector, to make sure that no department works in a separate manner. Everyone works in an aligned manner, and there is a coordination mechanism as well.
Okay, all right. Pariksha, thank you so much for joining us with all those details. So that is something we'll be tracking. But let's talk about the primary market now. Harsha Engineers 755 crore rupee IPO will open for subscription today. The company is the largest manufacturer of precision bearing cages by revenue in the country, with a 50 to 60% market share in the Indian bearing cages. Vaishta is joining us to tell us more details on the same. Vaishta.
Hi Sonal, thanks for that. Well, Harsha Engineers International is coming up with an IPO, and like you rightly mentioned, the issue size is of 755 crores, out of which the fresh issue is of 455 crores and the remaining 300 crores is for offer for sale. Now the issue opens today and ends on the 16th of September, while the price band is 314 to 330 rupees. So this is the largest manufacturer of precision bearing cages in terms of revenue in the organized sector in India. Now remember, bearings have multiple end user industries like auto, aviation, construction, mining, electronics and much more. The production facilities are in Asia, which is predominantly in India and China, and in Europe it has in Romania. In terms of market share, 50 to 60% in the Indian bearing cages market and 6.5% of the global organized bearing brass, steel and polyamide cages market. Now also we need to remember that the global bearing cages opportunity is as much as $5 billion and is expected to nearly double, that is to $10 billion by 2029. The company supplies to some of the top global bearing manufacturers. The company has two business segments primarily, which is one in engineering, which contributes 94% of its revenues, and the remaining comes from the solar EPC business. Also, it has a diversified revenue breakup with Europe, India, China, etc. The money that will be raised from this IPO is expected to be utilized for repayment of their borrowings, for funding capex, etc. Now, on doing a peer comparison, we know that Harsha Engineers International revenues are high at 1,300 crores, which is higher than Rolex rings, while it is lower than Timken India.
Okay, all right. That is about Harsha Engineering. We'll, of course, discuss it in greater detail as well. But for now, it's curtains down in this edition of Power Breakfast. Do stay tuned. Important trading day ahead. Bazaar Morning Call takes the action ahead.